right, so we're gonna break down this trade setup. This was the trade setup that I called live yesterday. It came all the way down to the target, and then we're gonna go over the setup that we were able to take advantage of today as well. All right, so number one, going back to this, right? When you see a big breakout, just know there had to be a lot of institutional buyers for this price to move this aggressively. Because when you go back, that is not a normal thing that price does, right? It is normal for price to move within a range, to move within a box, which I talk about in the playbook. Price is always moving in a rectangle, like you see right here, right? Is in a rectangle. So when price moves out of that rectangle, when it moves aggressively, know there are buyers in this area. And why that's so important is because price is always hunting the money. And what I mean by that is, why did this even move aggressively in the first place? Right? Is because when you look here, price ran up and price closed in breakout, right? When price closes in breakout, traders are chasing this market. Breakout traders are buying when this market breaks out of a level, right? A lot of people are taught to buy the breakout. That's why you always see a correction after a breakout, right? 99% of the time, you're going to have a correction, right? So that's why you want to wait for that correction before taking that trade. So as you see on this trade that closed in breakout, price came back and it traded into what level? What level did it trade into? When you look left, you see right here in the session time, right? This is during the New York session. Traders got in a buy right here. This was a perfect entry. That's why price came back, because it had to put heat on those traders. Because traders that were buying right here, they were moving their stops above, right below these previous higher lows. They were probably trailing their stops up, right? And then it took out of all of those buyers, even the people that were trading in this area. Because if you place the trade right here, even with a perfect entry, if you add slippage or if you add, you know, a spread, you probably got filled up here. So think about when price dropped this aggressively and you were in negative, if it didn't hit your stop loss, you probably got out of this trade because you thought you were in a bad trade and you didn't want to lose money, right? So just remember, price is always going from who's in the money, right? These guys were in the money. It came back to get them, right? These guys now that price dropped, they're in the money, right? Where did price go? It went aggressively to go take out all those stops, right? Because think about the people that were selling at the end of the day, right? This dotted line is the end of the day. Think about people that were selling at the end of the day. Think about the people that were selling at the beginning of the new day, at the beginning of Asia. Think about the people that were selling at the beginning of London, right? All of these people were in sales for over 12 hours. 12 hours worth of volume is trapped in a cell. Just think logically. Think logically, because I swear this stuff is so common sense. When you can learn to think with common sense, you don't even have to be smart, right? These people are all in cells. 12 hours of volume is now trapped in a cell once this price moved up aggressively. That's why institutional buyers stepped in to hunt all the money that was above these highs. That's why I say price is going from the money, from who's in the money to who's in the money, right? Because these people right here, right? These people right here, come back. These people right here, all these people were in the money. The people that bought in New York session, they were in the money. This is in the session. Think about it. This is where the most amount of volume in the entire market is. Do you think that price is just going to continue to go up without putting any heat on these traders? The market is not into giving out free lunches, right? So what happens is when people are trading something like this, most people aren't buying down here at the bottom, right? The top 1% are buying at the bottom. Everybody else is buying up here, right? And that's why price aggressively moves down and take out all of those buyers. And where did it go? When I drew this up yesterday, I drew up this blue line yesterday on the live session in front of everybody. Look at where this went to. Almost to the point. Because where did it go back to? Right here. These traders that's in the money. These traders that's in the money that caught this break-in retest from the previous day, right? When volume was trapped down here from the beginning of the New York session, 5 o'clock, price pumped up, and right before the session, it started dumping down. So you think about it. Most people are undisciplined. The market starts at 5. This is when all the undisciplined people are coming into the market. And most people are probably selling before the market even starts because they have no discipline. Just think about it. What is all the dumb money doing? It's selling before the market is even open. And then where does the market go immediately after it opens? Stopping out all these dummies that was selling ahead of time. I'm telling you, this stuff gets super simple. It is super basic. And then look at this. I gave you guys this with a perfect entry. Imagine if you would have entered when I told you to enter yesterday and you would have held it till I told you to get out. You would have made 200 points. That's 2,000 pips in one day. I know some seven-figure traders that don't even do 2,000 pips in a month. I gave y'all 2,000 pips setup in one day with almost no drawdown. Come on. If anybody is questioning, does my system work? They are absolutely brain dead. They are brain dead, bro. They are. They have no brain. Zero. Because I call this stuff out every day. I called this out live before it even happened. And it did exactly what I said to the T. I drew this line before it even happened. I posted the YouTube video from yesterday. Luckily, I recorded it. There's no denying it. I recorded the whole thing. Told you where price was coming. Gave you a beautiful setup. And then the same thing happened today. It's nothing new under the sun. It's nothing new under the sun. We talk about measuring these range expansions. Why do you want to measure a range expansion? Without context, it may not make sense. Why do you want to measure? Why do you want to measure a range expansion? Because the markets are timed and measured. And when you finally understand what that means, trading is going to become super easy to you. It is timed and measured. It is timed and measured. It's going to move a predetermined amount of distance because it's already pre-planned. That's why I say it's measured. It's measured. And I'll show you how it's measured. The market is in rectangles, right? You can see the market was in a rectangle. And you have 3 phases of every trade. You will see this every single day. It just looks a little different. And I want you guys to follow me. Follow me very closely. Make sure you're taking notes. This is very, very, very important because once you can listen well enough to really understand what I'm saying, this is going to become very easy for you. The market has three phases every day: accumulation, manipulation, distribution, right? This this dot right here, this is when the market starts. The market is consolidating. That's the first phase, consolidation. Usually you get that consolidation in the Asia session, right? Because that's when the market is opening up. Price is usually in the battle between buyers and sellers, and this is where the market is setting the price for the day, right? That's why I always say make sure that you identify yesterday's close. That level is very, 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 very important. When you look at this rectangle or this consolidation box in general, where is closing price? Closing price just so happens to be directly in the middle of this range. Do you think that's a coincidence? The median is where the algorithm set the price because this market is ran by an algorithm. That's why the markets is timed and measured, right? You see right here, this was the consolidation phase. We look for expansions of the range because the markets are timed and measured, right? And you can see once the price broke out, it went over 3 expansions of the range, went closer to 4. I usually just stop at 3 because that's my favorite number. But the goal is for price to expand multiple times past its original range. That's why I like to use these extensions as take profit levels, right? And you can see when you measure this expansion range from this swing low to this swing high, you can see we have the median price. Just based on probability, there's always going to be a high probability that the market is going to make a reaction to that median price. That's why in trading, most people are looking for a 50% retracement. And when you look at this, this is a perfect pump and dump setup. This is the same exact setup that happened yesterday. Pump and dump. It just looks a little different. The setup is just a little different, but it's the same concept. It's the very same trade, right? Let's zoom in and go deeper. So when the market closed here, right? The market closed, nope, market closed down here and it gapped up. The market closed here, right? When the new day opened, price traded lower. We just talked about that. When price wants to go up, it's going to get people buying. And then where it's going? It's going to go back to the traders that was in the money. Going back to the traders that was in the money, right? Why? Because only the top 1% was buying down here, right? All the dumb money, they were buying up here. And that's why most of them got stopped out before price really moved in that direction. So always remember that. Always remember that. When you want to buy something, you don't buy it up here. You wait for that pullback. And in the pullback, it's going to give you a perfect entry because the reason they're pulling back is they trying to put heat on these people to shake them out of the position before it go in the right direction. So anticipate that. That pullback is usually 50% of this new range. And that's where you take the trade. The same things happen over and over and over and over again. And that's why when you have extreme discipline like me, this is one of the easiest things you can ever do because it do the same thing every day. The problem is it looks slightly different. So you have to build that muscle memory in your subconscious before you can see it consistently like I can see it. Like I had to work to get to this point too. But it's possible. You don't have to be smart. I've taught people who didn't even know how to read to trade. So if they can learn it, you can learn it too. No excuses. You just need to learn discipline. It's because you want to wait for the right time, timing, levels, behavior of price. Those are three concepts you want to burn into your subconscious when it comes to trading. Timing, levels, behavior of price, right? So timing, first concept. When you look at the timing, there is a reason why I tell you to trade at 6:30 a.m. PST, which is 9:30 a.m. EST. That is the equity hour open. That is the midpoint of the New York session. That's when they open up the equities markets, right? That's when you see high amounts of volume coming into the market. That's why the market will be in this consolidation phase. And then you'll see the distribution phase almost always happens in New York. And the New York Equity Open is the catalyst. So why do you trade any other time than prime time? Because you're misinformed or you're undisciplined, right? So timing. Look at 6:30. Imagine if you would listen to how I teach you, right? Because I tell you to trade at 6:30. You would have missed all this bullshit and look at how fast you would have made money. At 6:30 in 5 minutes, in 5 minutes, 70 points. 70 points. And to bring reference into money, it's all, based on how much money you have in your account. That's going to determine, how much money you make, right? So a 10-cent lot at Tradiso um is going to cost you $1. And for every point on NASDAQ is $1. So every point that you make. So for on this one, you would have made $70 because it went 70 points if you had a 10-cent lot, right? And then you could easily do the math. If you had a standard lot, if you had a standard lot, which is $1, right? A standard lot is going to be $10 per point. And you would have made, instead of $70, you would have made $700. And don't forget, this is a 5-minute candle. You could have made $700 in 5 minutes instead of getting chopped up all night for hours trying to trade this, right? And I want to show you the front side, back side concept. This is the front side of the trade. Price broke it. This is the back side of the trade. If you're selling, you want to sell on the back side, right? Simple as that. We know at 6:30, because of timing, this is where the market is going to get busy. This is where the market is going to get busy. So we just want to be patient and we want to allow the market to tell us what it's going to do. And the market already told us if you know what to look for, right? If you know what to look for, and I'm going to give you guys so much game, make sure you're paying attention right now. Make sure you're paying attention. Make sure you locked in. Make sure you're taking notes because this right here is so valuable. I'm telling you, this is so valuable. This is the game changer that you've been missing. Get good at identifying these structure points. You must know what a higher low is. If you can't clearly identify a higher low, you're not going to succeed as a trader. Higher highs, higher lows, lower highs. If you want to get good at identifying these, you need to practice, ladies and gentlemen, just like you practice football. The only difference is this is actually going to pay you out. Most people never get paid from football. All right. Now, this is where it gets very, 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 very important. I didn't mark all of them now because I'm kind of going fast. No, didn't mean to do that. All right. So, boom. There we go. So we got higher highs and higher lows, right? Price made a higher high, higher low, higher high. Should have been one right there. Boom. Higher low. And then we got another higher high right there. And then something changes right here, right? What changes is this higher low is broken and price is no longer making higher highs and higher lows, right? Now that this is broken, this is what we call a market structure shift. Market structure shift, right? Why is this a market structure shift? Because the market shifted structures. It's no longer in a buying structure because it's no longer making higher highs and higher lows. The market structure has now shifted. It's not saying this in a downtrend yet, but it has shifted. That's very important to note. Now you have another lower low, right? So the market, oh, it actually broke this low too. No, those are equal lows. So you broke this one. That's the market structure shift. Got a lower low. And you got a lower high. Then the market comes down again and it breaks again. Now you got a lower low. This is the second lower low. This is what we call a break of structure, BOS, break of structure. Why is this important? Because once market is shifted and you're getting a break of structure, now the market is shifted from a uptrend to a downtrend, right? Now that you have these two breaks below and the market has broken the market structure and now it is confirmed with the break of structure that it's now in a downtrend, we're waiting for that 50% pullback so we can execute the sell. So price is here. We measure this movement. And if you were patient, you could have got a sniper entry right in this area, ladies and gentlemen. Right in this area, ladies and gentlemen. You could have been selling it right in this area, ladies and gentlemen, and taking it all the way down for range expansions. That's it. It doesn't get any more complicated than that. It doesn't have to be more complicated than that. It's that simple. It's that simple. And let's say, for example, let's say we didn't want to get in too early because we felt like this could be, a more risky situation, right? You could have waited till this candle closed. You got a bearish candle closed, and now you could have traded with that confirmation, right? Instead of trying to have that sniper entry trade, you can use this with the 1 bar stop, and then you can target one of these expansion levels. That's simple. That would have been an easy 1 to almost 3 risk to reward, risking 1% to get almost 3%. And then if you would have hit TP2, that would have been almost a 1 to 6. So almost 1% through to get 6%. This is how you become a profitable trader. That's it. I gave you all the information you will ever need to be successful. And I did it in less than 30 minutes. The rest that you're going to need is discipline. What I just showed you, it's only 10% of the process. The other 90% is your discipline. Can you show up to the charts on time every day? A lot of people struggle with that. I know myself personally. I had an issue with that for a long time. Are you consistent enough? Are you going to consistently do your daily report card? Are you going to consistently do your weekly report card? Are you going to consistently do your back testing? Are you going to consistently do what it takes to be a champion? Sometimes people catch on quick. Sometimes it takes a couple months or a few months to build that habit. I had a student, Ryan Gallimore. I'm gonna tell you about two of my best students so far. Ryan Gallimore, he was one student. He was a bounty hunter from Oklahoma. This is when it was about 2018. He joined my mentorship. His first week, he started with $1,000. His first day trading, he did a 100% gain on his account. By the time he finished the first week, he had turned $1,000 into $10,000, right? And part of that, obviously he came in on a week like this week where I called out a phenomenal trade, just like I called out yesterday, right? Just like this trade I called out yesterday, I called out a trade. The trade I called out only went 200 points. I just told you this one went 2,000 points. I called out a trade for him that went 270 points. He made $7,000 on that one trade alone, right? And that kind of changed everything for him, right? He was so disciplined and consistent and did everything that I asked him to do. And that's how he got to that level. And then once he started to make some good money, he doubled down and he paid for my high ticket mentorship. Then he flew out to Houston when I was staying in Houston. And he came to the house. He stayed there. We did sessions for 3 days. And less than a week after leaving, he caught a sale on gold. It was the same setup that I was teaching him on in live time. And he ended up catching that sale and he made $25,000 in one day. Make a long story short, he made a lot of money trading. He ended up opening a dispensary and built $1 million business from his trading profits. But it all started with discipline. He showed up. He did the back testing. He did the daily recaps. He did what it took and he was successful. He almost immediately from day one, because he didn't have any fear. He didn't make any excuses. He was disciplined. He showed up. He never missed a session, never was late. Always asking me questions. Paid for the additional mentorship. I got another guy, Smoke Dean, and this is one of my favorite stories. Smoke Dean, he was around around the same time, 2017, 2018, 2019, around that same time. And Smoke Dean came from Fort Worth. He went to ODY. And, we grew up in a very tough, low income neighborhood. Fort Worth was the murder capital of the world back when both of us were, very young in the 80s, and we grew up in a very tough time. My grandma had my mom at 12. My mom had me at 18. Neither one of them graduated from high school. And, I won't speak on Smoke Dean, but his situation was no better than mine, you know. And he came to me and he was like, man, one of our mutual friends got killed, selling weed. Somebody robbed him and killed him. And he came to me, he was like, man, that could have been me. He was like, I know I'm next if I don't get out of this, what I'm doing. And he was like, bro, he was like, I just got scammed out of like $12,000, man. I put all the money that I had saved up from hustling. I put it into crypto and I lost it. And what I told him, I was like, man, that's just a part of the journey. You can't allow that to slow you down, because sometimes you're going to have some learning opportunities. But when you keep going and you find the right one, it was worth all those times you lost that money. And make a long story short, he got into my mentorship, $50 a month. I remember. And to make a long story short, his first year, he turned I think it was like $275 or $280. He turned that into like maybe 15,000, something like that. Year two, he came back. He ended up restarting at that same like 200 and something bucks. But that year two, he actually took it to 300 and something thousand. And then I believe the next year he made his first million. And this is a guy who struggled on reading. Not to say he wasn't intelligent or anything, but he struggled with traditional education, because that's the environment we were brought in. Like my mom or my grandma ever learned how to read, So, um, saying that to say, I believe anybody who wants this bad enough, you can figure this out. There are people that come from a lot harder circumstances than you are, and they are crushing this shit. So it's no excuse. If you not, it's nothing wrong with it. You are the problem. You are the solution. You can change and you can start winning today. It's nothing stopping you.